I'm a financial advisor. I specialize in investments, pension, and life insurance.
But today we are doing something quite different. We are going to talk about insurance for wealth protection.
I was always very excited about matters finance ever since I was in high school.
Okay.
Business studies was one of my favorite subjects.
One can use insurance to protect their wealth.
Yes. That is wealth creation. Anything that you do that is bringing in some money means you've started creating wealth.
That many people have not made peace with the fact that we are going to leave this world either way. So we don't tend to think about it a lot.
Running business.
Yeah.
So you're constantly creating wealth.
Okay.
Then you're constantly multiplying that wealth in whatever manner that you choose to do it.
They leave their jobs.
Yeah.
But they seem to just be okay, and you tend to wonder what's happening. Did they stash some cash somewhere?
If you were to die today, would you name at least 5 people who you think and believe will take care of your children the same way you take care of your children?
This, when it goes to the money market, it compounds annually.
Yeah. These things could happen. So prepare for them, such that in case they happen, they will not catch you off guard. You will be prepared for them.
Start early, start small,
Yeah.
increase with time.
Yeah.
Welcome to Beyond the Pulpit podcast, where faith meets real life. My name is Silas Otieno, and I am really excited to be here. Those of us who've seen me long enough, you know that when we are here, we are talking about relationships, power, looking at book reviews. But today we are doing something quite different. We are going to talk about insurance for wealth protection, or how to use insurance to protect your wealth. And I'm really excited for this episode. We have taken a pause, and I know a long pause in this particular podcast episode, but we are back. We have amazing stuff coming up, so we'd like to tell you or to encourage you to like our podcast, share, subscribe, tell someone about it. Tell them that if you come to this particular channel, you're not going to live the same again. There is a lot of learning to do. You're going to learn about books. You're going to learn about human intersexual dynamics. You're going to learn about so much. And you're also going to learn about wealth and insurance and how to use it. So many people don't know how. And I'm excited to have a friend of mine, a very good friend of mine here. Her name is Abby. And I know Abby unaweza jintroduce. Karibu sana kwa BTP Studios.
Thank you so much.
Yes.
It's such a pleasure to be here.
Yeah.
I mean, I've been watching you and your guests for the past year plus.
Yeah.
And I never thought I'd be one of your guests. But here I am today.
Yes.
Of course, not talking about relationships, but mostly things in the finance spectrum.
Yes. And it's still part of what we discuss in this podcast episode. Because what we had envisioned is to build people, to give them this information that will not necessarily just get easily. And if we can have a one-stop shop where somebody comes, you want to learn about finance, it's here. We've done episodes with Francis who talked about finance. There is a guy I respect so much called Donge who talked about finance again.
Yeah.
We've talked about the business of education. We've talked about so many topics that are really building. And our favorite, the fun favorite, we are doing the art of seduction, going live on TikTok and doing all those things.
Yeah.
But again, we are excited to learn. And I have notes.
Yeah.
I have notes with me, kabisa. So how did you get your interest in this particular field? Hebu tuambie kulienda aje ama ulishtukia tu you are in this field?
Sikushtukia that I was in this field. Actually, before I get into that, I'd just like to give a brief background about myself.
Okay.
And you've said I'm Abby.
Yes.
I'm Abby Miano, and I'm a financial advisor. I specialize in investments, pension, and life insurance.
Okay.
And the reason I got into this, I was always very excited about matters finance ever since I was in high school.
Okay.
Business studies was one of my favorite subjects. Shout out to Mr. Kamamia. And even when I went to university, my undergraduate degree, my first degree, was in finance.
Oh, okay.
But then, as a lot of millennials have done, I detoured a little bit. I found myself in the tech space for a number of years.
Tech.
Yes.
Okay.
I wasn't doing any programming, but I was working with a lot of people in the tech space
Okay.
as a user researcher, just trying to help people understand the products and create beautiful, easily usable products, tech products for the masses.
Okay.
Yeah, but the calling, the pulling to the finance sector was always there. So after a while, I took a sabbatical and I went back to school.
To do finance?
Yes.
Okay.
But I actually specialized in insurance. I did a bit of the investments. I did a bit of retirement planning. You know what people call pensions. But I've also I did most of what I was looking at when I went back to school. I specialized in insurance.
Okay.
Yes.
And you were telling me before we even started recording that one can use insurance to protect their wealth.
Yes.
I always thought about insurance as ni zile vitu ziweko kwa gari.
Ni ukweli kuna car insurance. And in fact, people know about car insurance and medical insurance.
Only.
And when they talk about the players in the insurance industry, the insurance agents especially, they talk about them so negatively. Kusema hao ni wakora. Watu wa insurance ni wakora. Hawalipangi. In fact, there are people who say the only reason they take the car insurance is because it's mandatory by law to have it. Otherwise, they will not. But I'm here to sort of demystify insurance. I won't talk about the whole insurance industry or all the products in insurance. I'll specifically talk about life insurance.
Okay.
And how it can be used for wealth protection, like you have said, and why it's a key player if you're someone who is thinking of or has already started building their wealth.
Okay.
Yes.
So I have read somewhere that people are categorized in stages when it comes to wealth.
Yeah.
I want to gauge where I am. So what are the stages? What are the stages that you can categorize people? Because I think that's important.
Yeah. So it's not really categorizing the people in stages. It's more of the stages of wealth.
Okay.
Yes.
Okay.
And so the first stage is around creation of wealth.
Okay.
And creation of wealth is what you do when you go to your office and wait for a paycheck at the end of the month. When you start a business, hoping to, get some profits. That is wealth creation. Anything that you do that is bringing in some money means you've started creating wealth or you're continuously creating wealth. Then once you start that, the next thing that you need to do is multiply that wealth.
Okay. So creation, then multiplication.
Exactly.
Okay.
And in multiplication, that is where the investments come into play.
Okay.
Because you are earning a paycheck, you're getting 50, 100, whatever amount of money. But in the back of your mind, you're like, how can I double this? How can I make more?
Okay.
So the investments come into play. And we have the low risk, people put their money in money market funds where they earn a little interest.
Yeah.
We have the high risk investments. We have people who are buroti.
Maguta.
Yes. Who buy land, partition it and resell it for profit. All that and more is in wealth multiplication. And then we have the final stage, which is very important and which a lot of people do not think about, which is wealth protection. And that is where the life insurance comes in.
So wealth creation, you create wealth,
We multiply.
the people who are just first employed
Yeah.
employed are creating.
Yes.
Or you're starting a business.
Yes.
You are creating it.
Yes.
Then multiplication is where you are increasing. Like, let's say your business is doing well, it's giving you profit. You're opening another business from this business.
Yes.
You're expanding.
Yes.
So you're multiplying that wealth.
Yes.
And then you need to protect it. Because why is there really need to protect this wealth?
You know, the first two things, the creation and multiplication, they are continuously happening.
Okay.
Sindio? Because once you start working, you don't work for 1 month and go home and that's it.
Okay.
You continue working. So
Yeah.
you continue getting your paycheck. You continue running your business.
Yeah.
So you're constantly creating wealth.
Okay.
Then you're constantly multiplying that wealth in whatever manner that you choose to do it. But very few of us actually protect that wealth. Remember when I mentioned about the common insurance products that people say? I said car insurance and medical insurance.
Yeah.
Why do we take medical insurance? Because if you're working, if you're an employer or an employee, when you get sick, you want to go to hospital, get your diagnosis, get your medicine, take it, feel better so that you can come back and continue with your wealth creation.
Yeah.
Whether you're an employee or an employer, you want your person to go who's unwell to go back to hospital, get well, and then come back.
Okay. Yeah.
But we don't think about the larger picture. Sometimes some of the illnesses that we get are beyond your homa, malaria that will take you out for a few days
Yeah.
and then you're back on your feet.
Yeah.
Sometimes we have more critical illnesses that can come into play. We also have the very big thing that will happen to all of us, but which we culturally or maybe through fear, we never like to really think about or talk about. Death.
Death. Yeah.
And death can have severe implications in families,
Yeah.
in businesses, and in communities. And I want to show people or to teach people how we can prepare for some of these eventualities so that in case they happen to us, the world that we have spent so many years creating does not end with us.
Yeah. I read somewhere that many people have not made peace with the fact that we are going to leave this world either way. So we don't tend to think about it a lot because we've not made peace with it. So you're saying that that protection
Yeah.
is because you know that you certainly are going to die, and it is important
Yeah.
when you die that your beneficiaries, I'm thinking like someone who
People who are dependent on you.
they're called dependents.
Yeah.
Your dependents
Yeah.
are not left just like that.
Yeah, well, that is one way to look at it. Actually, it's the best way to look at it. But nataka nipeleke watu pole pole.
Pole pole. Okay.
Sindio?
We'll get there then.
Tusianze kuongea about the big D.
Okay,
death
okay,
instantly. Wanaweza toroka, wanaweza ogopa.
Sawa, ladies and gentlemen, msiogope.
Yeah.
So how does insurance help protect your wealth? How does it help protect your wealth?
Okay. So today I'm going to talk about life insurance.
Okay.
And I'm sure your audience, majority of them may have heard about life insurance. But out of that number that has heard about it, a very small number of them have actually taken life insurance.
Okay.
In Kenya, the penetration of life insurance is about 1%, 1.2%. In all the Kenyans that we are about 50 million. We'll take out the children, but anyone over 18, people who actually have life insurance are about 1%.
1% of
Yes.
50 million.
Yes, about
Jeez.
1%.
Okay.
And I'd like to talk about what exactly life insurance is, how you can get onto it, and how it can be of use to you.
Okay, I'm interested to...
So number one, let's talk about this big thing. What is life insurance?
Okay.
In simple terms, It is a product where you, the person, become the asset that we are protecting or that we have insured.
Okay.
So you take a policy that would pay money, that would pay money to the dependents that you would leave behind or the people that you would leave behind in case of your death and who have been financially dependent on you for
Okay.
this while.
Okay.
It is actually I would say it's a love product.
A love product.
Yes, because it's not for you. It's for other people.
Oh, it's not for you.
Yes,
it's for other
not.
people.
It's for other people. Life insurance is not a savings product, and
Okay.
it's not an investment product. With your
Okay.
savings, utazieka, and then at some point you can go and chomo and start using that money. With your investments, as you make the money, you will use some of it or all of it, depending on whatever plans you have. But that's not the thing with life insurance. You will never use that money. That money is for your loved ones. And I know people don't like hearing that.
Yeah.
Kuna watu where wakiimagine ati I leave behind tens of millions for other people to use. They're like, Anna, wacha nikule hiyo pesa sahi.
Yeah.
But I sometimes think that could be a selfish mentality, because think of this scenario where a mom or a dad has some children that they're raising. If anything was to happen to them and they end up passing on, will they be happy in the afterlife knowing that their children back on earth are suffering?
Not really.
I would assume they would not be
They
happy.
wouldn't.
Yeah?
Yeah.
And those are some of the things we need to open our eyes around. So life insurance is a product that you take up to protect your loved ones.
And
Loved ones who
bef-
are financially dependent on you.
On you.
Yes, that is very key. Loved ones or people who are financially dependent on you.
You've said that definition has really struck me. Where you are the asset.
Yes.
Could you repeat that? I've never thought about it that way.
Yeah.
Yeah.
You're the person of interest when it comes to life insurance. When you take car insurance, the car is what is of interest. You
Okay.
take car insurance so that in case you get into an accident, you're able to get monies to repair your car
Yeah.
or even replace that car in case it's a write-off.
Yeah.
So in this case, we are replacing the car with you.
Oh, you take the place of the car.
Yes.
Okay, understood.
Yes.
Understood. Okay.
Yes.
Continue.
So now that I've described what life insurance is, I'd like to briefly mention the types of life insurance we have. We have the endowment policies, which is what a lot of Kenyans have.
Endowment policies.
Yes, the education policies,
Oh, okay.
the insurance saving policies. Those are endowment policies. And they usually have a mix of savings and protection merged in them.
Okay.
So like an education policy, you take it, you pay some money for a designated period of time, let's say 10 years, but you usually know that in case I die, maybe in year 5, there's some money that my people, now who we call the beneficiaries, will be paid. There's a lump sum of money that they will be paid that they can use, to continue with their lifestyle. And then if the product was a 10-year product, if I've died in year 5, my people have received some certain money. In year 10, that policy will mature. And there's another lump sum that they will receive.
Oh,
And
okay.
that product collapses and finishes there. That is an endowment policy.
Before you go to the next one, so I have a question. Like you have mentioned, somebody has taken a 10-year endowment. It's endowment
Yes. You can call it a saving product.
product. Let me
Yes.
call it a product.
Yes.
So they've taken a product
Yeah.
for with a time period of 10 years.
Yes.
So, and they come and pass, unfortunately, at year 3. At year 3, there is some money they are going to be paid. Their beneficiaries are going to be paid. And then, after the at year 10, when it matures,
Yes.
they're going to pay the lump sum.
Yes.
Which is the sum? Is it the sum that someone has filled in that form? You know, I've seen these forms.
You've seen them?
Yes.
Okay, what are you trying to tell your audience?
No.
You're a
nothing,
well-protected man.
Nothing. I have seen it in the course of my research.
Yes. Okay.
So, how is that how it works?
Yes. So there is a certain amount that you know you will receive back. And I'd say people, there are two groups of people. There's one group that really believes in the savings products, the insurance saving products, the education policies. They take them up, they put in money for a period of time. Then at the appointed maturity date, they receive whatever they had put in, plus a small amount of earnings, I would say.
Okay.
But endowment, this product, this life insurance product, has a maturity date.
Okay.
So it only offers you protection for a certain period of time.
Okay.
Yeah. Could be 10 years, could be 15. That's it.
Got it.
Yeah. Then we also have a term life policy. That also is a product that has a maturity. So assuming you've got a job contract outside Kenya, in a region that is, would say, seems relatively unsafe, right? Where there's still civil strife, it's not as democratic and as safe as Kenya. And you worry that this contract of mine, nikienda huko, I'm not sure if I'll come back.
Okay.
You can decide my job is a 10-year contract job. Let me take a 10-year term policy.
Okay.
So you pay a certain amount for those 10 years. And with this product, if you don't die within those 10 years, at the end of the 10th year, it collapses and you do not get any money back.
Okay.
But if you die within those 10 years, your people again, they will receive a certain amount of money.
So
Yeah,
you get nothing.
you get nothing. Kumbuka, I said it's not a savings
Oh,
or
it's not a
investment
savings,
or an
ah.
investments product.
Okay.
It is a protection product.
Oh, it's a protection product.
Yes, it is a protection.
Anything that happens before it matures, before the maturity or the expiry, niruhusu nitumie tu hizi mi ama
Expiry, yeah?
mi nitatumia hizi ma expiry. I don't know much about it, but
Yes.
in case you pass on
Yeah.
before it matures,
Yeah.
then you get the payment.
Not you,
No, yeah,
your beneficiary.
beneficiaries.
Yes.
And if you don't, if you outlive it,
Yes. It collapses and we say kwaheri, bye
ah,
bye. Yes.
that's a nice one. That's a nice
Yes.
one. Okay, understood.
And now there's a third one, which is my favorite, and which I champion for, and which is the reason why I'm seated here.
Okay.
Because I want as many Kenyans of eligible age, 18 and above,
Yeah.
to know about it.
Okay.
This is the whole life insurance product.
Okay.
Yes,
Whole life insurance.
whole life insurance product. And as its name suggests, whole life, it protects you for your whole life. So if you were to take this product at age 20 and you kept up with your payments, which I will get into, you will be protected to the day you die. Whether you die at 30, 99, 109, you will be fully covered for the rest of your life.
Okay.
And this is how it works, yeah? So to get a life insurance product from an insurance company, you agree to pay a certain amount of money per month to the insurance company.
Got
And
it.
they in turn agree that if certain things like illness, disability, and death happen, we shall pay you. You can be paid in case it's an illness or a disability. But if it's death, they will pay your dependents, who we like to call beneficiaries.
Beneficiaries. Okay.
Yes. So that's the number one thing we need to understand. That you get into an agreement or a contract with the life insurance company where you, as the person of interest, will be paying a certain amount of money for a period of time, and then they in turn, in case of certain things happening, which I've mentioned, illness, critical illness, disability, or death, they will pay out a lump sum amount of money.
Okay.
Yeah.
I see why it's your favorite.
Yeah.
Okay.
Yeah.
Okay. That one, I think I've understood it.
Yeah.
But I know you're going deeper into it.
Yes.
So I will not ask any questions. I just want you to continue so that we can. Yes, let's continue. About
So, so we've understood the first part of how
Yes.
you get onto a life insurance product, right?
Yes.
And I mentioned you pay a certain amount for a period of time. So you are the one who chooses, and you have options. You can choose to do the payments for 10 years, for 15 years, for 20 years, or say, I want to pay until I'm 60 years or until I'm 65 years.
Okay.
And then once you're done with your payment period, you stop paying, but the cover remains with you for life. So let's take 10 years as an example.
Okay.
Someone who's 30 years has come and said, hi, Abby, I'd like to have a life, I'd like to take up life insurance. Say, okay. And what term would you prefer? And they say 10 years. Say, sawa, sawa. They start making their payment. They can choose to be making their payments monthly. They can choose to be making their payments every 3 months, every 6 months, or annually. And that is usually dependent on how your earnings are or just the kind of person you are. Kuna watu wapendi kusumbuliwa na bills ndogo ndogo every other time. So their preference is, if I'm taking a 10-year policy, let me be making annual payments. I pay once, mwaka inaisha, twice, the second, third, 10 times, and I'm done. And then once they're done paying, the cover still remains. I'll keep repeating myself because I want people to really understand.
The cover remains.
Yes, I want them to really understand this product.
And let me ask, do you determine the amount you pay, or is the amount you pay set?
I was going to come to that.
I
like these questions.
Okay.
Yes.
Okay.
So we've talked about the period of time. Then you can determine the amount you'll be paying. And this payment you'll be paying we usually call it a premium in the insurance lingo. There is a way insurance underwriters will calculate this.
Okay.
And number one, it's very dependent on your age. The younger you are, the lower your premiums. The older you are, the higher your premiums become.
The younger you are,
the cheaper
the premiums you pay.
Yes.
The older you are, the more expensive.
The more expensive.
You'll explain why, or I should just jump in and ask why.
It's basically that, an age thing.
Okay.
The older we become at risk people. Risk for certain diseases.
You're at more risk.
Yes, risk of falling. We become riskier.
Okay.
But at our youth, when you're in your 20s, you're very
not
fit.
You're
a much lower
risk.
Yes.
Okay. Understood.
So we've talked about the payments, the premiums, and we've talked about the length of time. Now, what I'd like to elaborate on is the advantages of having a life insurance
Okay.
cover. So number one, which is very key, is what we call income replacement. Yeah? And I'll use illustrations for this. We like talking about parents a lot.
Yeah.
Because once you become a parent, you have a dependent. You have a child who is just looking at you like this, waiting on you for their food, for their clothes, for their shelter, for their school fees, for basically everything. And a lot of the things they need from you, money, finances, have to come into play. Food, you don't get food for free. You have to pay for it.
Yeah.
Clothes, you have to go buy. School fees, you have to go pay for
Pay.
that. Holidays, everything is money, right?
Yeah.
Even where you live, rent. Well, not everyone rents, but majority of us Kenyans
As a person who's
are in
renting,
rentals.
I can tell you that payment is not a cool payment.
Yeah, but you have to do it, right?
But you have to do it, yes.
And besides children, some of us, especially millennials, we have a lot of black tax. We take care of our siblings.
Yeah.
We take care of our parents, and our parents are now elderly. Some of them are ailing.
Yeah.
They're always going for checkups. Mekaa hivi unapigwa, mom is not feeling well, or dad, we need to take them to hospital. And other ways that we financially bless people in the community.
Yeah.
So if you are not there, let me use myself as an example. I have some children. If anything was to happen to me today and I'm taken out of the equation, I die, what will happen to those children?
Yeah.
What will happen to them? I like to ask parents, in fact, let me look at that camera when I'm talking to them. If you were to die today, could you name at least 5 people who you think and believe will take care of your children the same way you take care of your children?
Wow. Hebu rudia hiyo swali. Hiyo swali rudia. Hiyo swali.
Yeah?
Just repeat that question.
If you were to die today, do you have at least 5 people, I can even make it 3 people, who you believe will take care of your children and give them the same lifestyle that you're currently giving them today?
Ooh. Okay.
And najua kuna watu wataanza kufikiria, Abi, unataka tu kutushtua. No. It's not about fear mongering.
It's reality.
It's reality.
Yes.
We all hope for the best, but we have to prepare for the worst.
Yeah, true. Correct, yeah.
If I am not there physically, gone, and I'm not coming back, what will happen to the people who really depend on me? And sometimes unaweza sema mi hata si mzazi,
Yeah.
but maybe you're the one who takes care of your mom.
True.
You're the one who takes care of her medical bills. You're the one who ensures your dad gets physiotherapy, or has a roof over his head. So these are things to think about.
Hey, that question
has
got me thinking. I'm still thinking about where I don't even want to say if I know anyone.
Yes.
Or I don't know. So I can neither deny nor confirm, but I am concerned.
Yes. No,
I am concerned.
Socially, we have people who love us.
Yeah.
Who love our children, our families. But it's not the same as just because they love them, they will take care of them. And take care of them well. So that's something that we protect. We try and help you protect.
Yeah.
And you may wonder, we when you're introducing, you said we're talking about how we can protect our wealth through life insurance. So you might be wondering, or your audience may be wondering, where is the wealth coming in this place?
Yeah.
Wealth is just not your material possessions, right?
Okay.
We also have other types of wealth. You've seen people say, I am wealthy because I am loved.
The wealth of love.
Yes. I have wealth of integrity. I have
A
my
wealth of
children.
knowledge.
I have my children. I have my husband. I have my man. So I'm wealthy. Yeah. So your family and your loved ones, they fall into this equation. And when we talk about income replacement, there's a certain calculation I like to give people, which then helps them understand how much they should be protecting. Let's use an example of Mr. Silas here. Nikikuangalia hivi naona kama in a month you spend 100,000 shillings
KRA, no,
on taking care of
it's a
yourself
joke.
and your loved ones. Because no man is an island. I'm sure you have people around you, right? So let's assume to run your household or to take care of your loved ones, you spend around 100,000 per month. In a year, how much is that?
That's 1.2 million.
That's 1.2 million. 100,000 times 12, that's 1.2 million. So we like to use the rule of thumb where you multiply that by 10. So 1.2 multiplied by 10.
12 million.
It gives you 12 million. So if you were to come to me and you wanted a life insurance cover, I would tell you, based on how much you've told me you spend in a month to take care of your people, you need to take a cover of at least 12 million, or a cover that's protecting at least 12 million. This is for someone who is approximately spending 100,000 per month, which comes to 1.2 million per year. Then we multiply that by 10 to give 12 million. Why is that? Because if this person is no longer alive and working to bring this money into their household, if his people or his beneficiaries are given a 12 million lump sum and they put it in a low risk investment like a money market fund, most of the money market funds right now are giving
12.
between 10 to 12% interest. So if they packed this money in a money market fund that's giving even 10%, how much would 10% of 12 million be?
10% of 12 million. 1.2.
1.2.
Yeah.
That will be the interest, but that's an annual interest,
An annual
right?
interest, yes.
And interest is paid out monthly.
Monthly.
So what is 1.2 divided by 12 months?
100 Gs.
100 Gs.
They're in the same lifestyle
Yes.
that you were giving them when you were alive.
Exactly. So if you die, let's say it's a man, he dies, his wife gets 12 million, puts it in a money market fund, doesn't touch that principal. Remember, that money is not taxed.
Yeah.
So if it is 12 million, you get 12 million.
Yeah.
Pack it in your money market fund. Every month, every year, you're earning 10% interest. So that's 1.2 million, which is paid out monthly, which will now translate to 100,000. What has that person done? They have replaced themselves in the family without actually being there.
Yes. And I this when it goes to the money market, it compounds annually.
Yeah.
So if it was 12 and it comes to 13 point this, then and they don't touch it, it still compounds.
Well, if this will be very wealthy individuals, if they're not touching
they're
it.
not touching it, yeah.
But we are working with the assumption that they would be
perfectly dependent on this guy.
Yeah.
Okay.
So you see, this person has automatically replaced 100,000 back into their household. So that's the income replacement that we talk about.
Let me ask a question, and maybe I might be jumping.
Yeah.
And let's say you have taken this insurance for 10 years. This 12 million. Do you have the right to say that upon my demise, put this into a money market account where they can access it from it?
No.
Or you don't have control over that?
What you have control over is where this money will be paid out. Right? And it can be paid out to individuals, or it can be paid out into a trust.
Or a trust, okay.
Yes. But I don't want us to talk about the trust today.
Okay.
I don't want us to lose.
Okay, to lose traction.
Yes.
It's
We
okay.
can talk about that another day because it's also a very important part of wealth protection.
Okay.
Trusts are very important. Family trusts, cash management trusts are
Yeah.
very important. Yeah.
I think we should talk about it later.
Yes.
Yeah.
But when you're filling out your forms, you do say who should receive this money. For married people, it could be your husband, could be your wife. Well, even married people sometimes don't put their spouses.
Yeah.
They choose their sisters, their brothers,
Yeah.
their friends. Grandparents, cousins. You decide who should receive this money, and the assumption is that this is a very strong social connection that you have, who you believe would use that money well and for the intended purposes.
Yeah.
Yeah. But if in doubt, that's where the trusts come into play.
Okay.
But sorry for another day.
Story for another day.
Yes.
Got it.
Yes.
Got it. That's some seriously good information. I'm learning new things, imagine.
I hope you are, and I hope you'll practice them
I
when we
will
get to the
practice them.
end.
Yes.
So
definitely.
we've talked about income replacement. The next thing I'd like to touch on is that it's not only death that comes and destabilizes families, businesses, communities financially. Illness also does that. Critical illnesses do that.
Yeah.
And I'm sure in your circles, you've probably heard of someone who's undergoing cancer treatment. You might have heard of someone who got a stroke, or who has renal failure, and a bunch of other things, heart attacks, paralysis. There's so many things, blindness, organ failure. There are certain illnesses that we call critical illnesses, because once they hit you, your life will never be the same. And treatment for these illnesses is not easy, and it's not cheap.
Yeah.
And so a life insurance policy can help with that. And I know people may say, but I have a medical cover. Yes, we have medical covers. But even our medical covers, they have certain limits as to which they can pay for this.
Yeah.
But with the life insurance policy, you might have stipulated certain amounts where, in case of a critical illness diagnosis, you get this lump sum paid out to you. Remember, with a medical cover, you go to hospital, you're treated, then the insurance pays directly
Yeah.
to the hospital. But with life insurance, your critical illness lump sum is paid to you. You decide what to do with it.
Oh, it's paid to you.
Yes, it's given to you.
Okay.
So imagine you've got a cancer diagnosis. You go and put in your claim, and you get 3 million paid out to you, or 5 million paid out to you. You decide what to do with it. You can use part of it for treatment. You can go to India. You can comfortably seek treatment within the country and outside the country. It might even reduce, it's not easy asking people to changa for you.
The WhatsApp groups.
Yeah. And sometimes it's not that people don't want to raise funds for you. They just don't have the funds.
Yeah.
They've given round 1, round 2. Inafika mali hata wao wenyewe hawana. Si ndio?
Yeah.
But with a critical illness cover, you get a lump sum paid to you. You can use part of that money for your treatment, and you can still use part of it for some of your bills. Because remember, when you get ill, you may not necessarily be going to work.
Yeah.
And there are certain employers where, after a certain period of time, you no longer get your full pay.
Yeah.
You get maybe a certain percentage of it. If you're a business person, you're not going to your work. You're not making as much money as you would, especially if that business was highly dependent on you to be there.
Yeah.
But your bills don't say, oh, now you're sick, let's stop. They still pile.
Like this podcasting is highly dependent on you being there.
Thank you.
Yeah.
Yes. So you can still use part of that money to cater for your recurrent bills. You can still use it for food in the house, rent, pay off some debt, and try and maintain life as normal as can be in such a situation. You will not necessarily have to start letting go of your wealth that you have created. You don't have to start selling off your land at throwaway prices,
Yeah.
selling off your apartments and other assets at throwaway prices. You may not necessarily have to get into debt
Yeah.
for your treatment because you've catered for this. You know, these things don't tell us.
Yeah, they don't.
Cancer
They don't
ituambiangi
announce.
ati Abby, Silas, at age 35, I'll come knocking at your door. They just surprises.
Is this the reason why you see some people? Because I've seen people who have gone through the critical illnesses. They leave their jobs,
Yeah.
but they seem to just be okay, and you tend to wonder what's happening. Did they stash some cash somewhere? Could
That's
that
true.
be the reason?
That could be one of the reasons.
Yeah.
Of course, we do have individuals who
Yes.
are in their own right wealthy.
Yeah.
They have their savings. They might have very, very good medical covers. They might have a very strong network financially. But we also have people who use this.
Yeah.
Yeah.
You can't tell.
You can't
That's
tell.
a good
You
thing.
may never know.
Yes.
But remember something I said earlier? We hope for the best, but we prepare for the worst. Yeah. And something similar that you can also protect yourself against would be disabilities, permanent disabilities. You might be cruising in your car, get into an accident, and you become paralyzed.
Yeah.
You might be in a work-related accident and you lose your eyes, you become
Yeah.
blind.
Yeah.
And you know your life changes after that.
Yeah.
So as you're trying to get your footing, you can get a lump sum similar to the critical illness one that can help you with that. See, if you lost your eyes, you might need to go and learn how to, live independently as a person who no longer has sight.
Yeah.
Learn how to use braille, how to walk with the white stick, how to be independent in a world where it's built for people who see. So you can use funds for that, for treatment, for sort of restarting your life again, for bills. It's up to you. This money is given to you. It's not sent to the providers.
Yeah.
Yeah.
Well, that's got me thinking.
Yeah. But now let me say something positive.
Yeah.
Or that will brighten our audience's day. Majority of us will neither get these critical illnesses and disabilities or die early.
Yeah.
You will neither get the critical illnesses and disabilities nor die early. So these people who are currently very financially dependent on us, children, they grow. By the time we're passing on, I think our life expectancy as Kenyans currently could be 70. By the time you're 70, your kid is probably 30. They're already probably living by themselves, working, just living their own life. But remember, I said the cover remains with you for life. So when you pass on in your 70s, 80s, 100, this money will still be paid out.
It will still be paid out.
Yes, but now it will no longer be coming to replace an income. It will now become an inheritance.
Okay.
And cash is king.
Cash is
at
king.
Whatever age you get it.
Cash is king.
Yeah? Unajua sasa tunalianga ati watu wengine wakipata mashamba our fathers and mothers were in discos. Our children might be saying the same of us if we don't have these products.
Where
Because
you've-
they'll be seeing their peers ati unajua mzai alienda lakini
Hakutuachia
aliniachia ka 20 mil. Mzai wangu aliniachia, you know? Yeah.
I was having a conversation with Mzungu where you've said cash is king has made me remember.
Yeah.
And he asked me, looked at me, he was my boss, he looked at me and he told me, he asked me, Silas, what's the golden rule? And I was going all biblical, do unto others how you would have them to do unto you. Then he looked at me, laughed and said, no.
Yeah.
He who has the gold rules.
Yeah. And what is the gold right now?
Cash.
It's cash.
Cash is king. That's true.
Yeah. So this money can, of course, become an inheritance that you could leave to your dependents. Yeah.
Okay. The other one.
So I don't know what you think about that. Najua nilikushtua kidogo. But
No,
then
I'm just taking it in.
I hope
I'm
we've
actually
ended well.
literally taking it in.
Yeah.
Especially the question that you asked. If you pass on, who are the 5 people who you're sure would take care of your dependents?
Yeah.
And we don't think about those things, sadly.
Yeah.
Especially if you're in good health.
Yeah.
You think that your life will just be okay.
Yeah.
You'll just live a normal, okay life.
Yeah.
Until it hits you.
Yeah.
And since these things don't announce themselves when they are coming,
Yeah.
if it gets you when you're not prepared, you're doomed.
And let's be realistic.
Yeah.
We've seen it in our communities.
Yes.
We've seen families where they were once the talk of the village because of how affluent they were.
Yeah.
And then their dad or mom passes away. And before they pass away, maybe they were ill for a certain period of time. And slowly we start seeing them collapsing in on themselves.
Yeah.
Because they sell off, you start off with the cars. Which is ile unaona ni haraka. Start off with the cars, you go to your land, your houses. You start selling things in your house. You even downscale your life. And eventually when this person passes on, the people left behind, life is usually very hard for them. Yeah. I know that's not the case for everyone, but it's something we have seen, but we can try and prepare for. I'm not trying to scare people. I'm not trying to make you feel like ati kesho unagonjeka ama kesho unakufa. Apana. What I'm trying to tell you is these things could happen. So prepare for them, such that in case they happen, they will not catch you off guard. You will be prepared for them. But if they don't happen, that will be millions of shillings that you will leave behind for your children, that you will leave behind for your loved ones.
It's like someone, I read somewhere, they are saying that's the reason we have fences, even if you live in a safe neighborhood.
It's true.
You have fences and security system.
Yeah.
Not because that place is unsafe, but in the event somebody tries to get into your premise or come and do or harm you, there's probably some levels of protection that you have set for yourself. So, it's very important.
Look at your car. You take insurance every year.
Yeah.
You don't get into an accident, you take it again.
Yes.
You drive into your 50s, your 60s, you still take insurance.
Yeah.
Knowing very well I've never got into an accident.
Yeah.
But you still take it.
Yeah.
You take medical cover.
Yeah.
You don't get sick for a whole year.
Yeah.
But the next year you still renew
You still
it.
do it.
Yeah, so what about your life? What about the people you love?
We should treat it the same as we treat our cars.
Yeah.
We should treat ourselves the same way we treat our
Well,
cars.
much better than we
Much
treat our...
better than.
Much better
But
than
at
we
least
treat
for a
our
start,
cars.
we should start with. Just this, I think treat below.
We should treat ourselves
Yeah.
and our loved ones very well. There's something else I'd like to talk about. I've mentioned families. But I also like to have this conversation with business people.
Okay.
And especially people who are founders or who play a very key role in their businesses. If they're not there, that business will not run as well as it should. These covers work very well for them. We
Okay.
have something called Akiman insurance, where the business takes cover for the person for this main
Key
person.
guy.
Yes, key guy in the business. Such that if they were unwell and this illness is starting to be a prolonged illness, or if they die, this money will come into the business and the business can use it to sort of replace this person. Hiring for high level, high value people is not easy and it's not cheap. So businesses can protect their continuity through this. Yeah. So it's not just at individuals,
Okay.
even businesses can
Okay.
use life insurance for their continuity.
And so, when is the best time then to take a whole life cover? When is the best time?
I would say the best time was yesterday.
Ah,
And the
yesterday.
second best time is today. Basically, what I'm saying, for anyone between the ages of 18 and 60, and who has a semblance of income and who can pay for this, the sooner you get it, the better. And remember, I said the older you become, the more expensive.
Your insurance premiums
Yeah.
are. Okay.
Yeah.
So the best time was yesterday. The second best time is today.
Yeah. So for people who are listening to us having this conversation and they don't have life insurance covers, please consider it very seriously and take one for yourself.
Yeah, yeah.
Yeah.
Especially the pointers you have put. They really make you. You know, sometimes we need that moment where you're actually reality is brought in your face. However sad the reality may be,
Yeah.
it is brought there
Yeah.
so that you think about it.
Yeah.
Because let me tell you something, Abby, we
Yeah.
avoid thinking about those things.
Yeah.
We really avoid. And then you get hit
Yeah.
by something. And now, whether you like it or not, you're not going to avoid it.
Yeah, you have to deal with it.
You have to deal with it.
Or at least the people you've left behind,
They start dealing
they have
with it.
to deal with it.
Yeah. So
Yeah.
it's something. It's very important.
Yeah. In fact, I've just remembered something that I wanted to share. Just so that we have some numbers that we're thinking about.
Yeah.
Because one of the things I'd like to demystify is that insurance and life insurance is only for wealthy people.
Okay.
It is not just for the wealthy. And I'll use the example I had given earlier about someone taking a cover that protects 12 million. And I want people to listen to this very carefully.
Okay.
So I'll use the example of someone who's 25 years and who's taking a cover to protect 12 million.
Okay.
Their monthly payment or their monthly premium would be 5,751 shillings.
For 12 million.
Yes. So that's what they would pay monthly
At the age of 25.
at the age of 25.
Okay.
For someone who's 35, for the same cover, they would pay 7,084 shillings.
Okay.
Yeah. For someone who is 45, they would pay 11,650 per month. Can you see? Inaenda ikiongezeka. It's going on increasing.
So delaying costs you heavily.
Yes. And for someone who's 55, they would pay about 22,200 shillings. And
For the same 12 million.
for the same 12 million.
Okay.
And now, what I'd like to say with those numbers, let's say you're 25 years, you've had me say for a 12 million shillings cover, you need to pay the 5,700 and something shillings. But when you look at your finances, you're like, 5,000 is too much for me. What I can comfortably afford is 3,000 per month. You can still get covered, you can still get protected
With the 3,000.
with the 3,000.
Okay.
It's just that probably the number will reduce from 12 million to maybe 10 million or something. So we can still work with whatever you're comfortable with, because we'd rather have little protection for yourself and your loved ones than no protection. Yeah.
So what is, before we continue on that point, what's the minimum amount one can get covered a month?
Could what you can pay per month?
Yes, minimum.
Well, depending on age, we can say from about 3,000, but there are some younger people who can even do like 2,500.
Okay.
Yeah.
So around 2,500 there.
Yeah.
Okay.
And the thing is, you can start off with 3,000, right? And then as your finances improve, you realize, oh, now I can actually do 7,000 per month instead of 3,000. You can ladder your policies. So you have your first one that was 3,000, that was protecting you for X amount. You get a second one that you're doing now 4,000, that is protecting X amount. And all this money will be for your loved ones.
Okay.
Yeah.
And
you can increase the amount.
You can increase that also increases the what do we call it? The lump sum.
Yes.
Yeah.
The
Okay.
sum assured.
Sum assured.
Yes. It increases
Hey,
it.
wacheni kunichekelea if I am using hizi
Yes, you can ladder it. So people should not worry and say, oh, hizo vitu nasikianga ni za mtu wa 20k nini. Hapana. We can customize protection cover based on what you can comfortably afford.
So another question, who are the people eligible
Yeah.
for this?
So I said, so anyone who's between 18 to 60 years can take it.
18 to 60.
Yes. And you should at least have an income or a way to be able to pay for your policy. There are other things that we could look at, like your health, where the underwriter might say, oh, you need to do a medical checkup before we take up your policy. But because I work with one of the best, in fact, I would say the best life assurance company in Kenya, and the fourth largest in the world, we have what we call a free cover limit, where you can take a life insurance policy with coverage of up to 15 million shillings, and you will not have to do a medical cover. I mean, a medical checkup. Yes.
Let me ask a question, and it's just coming to my mind.
Yeah.
You have taken the whole life.
Yes.
We are talking about the 12 million. You are working and are able to pay the premiums.
Yes.
Then we get to year 6. You lose your job.
Yeah.
Or your source of income. You're still in good health and everything. You lose your income.
Yes.
What happens? You're no longer able now to pay the premiums.
Yeah.
What happens?
So, number one, there is a grace period where your cover is still intact, even if you're not making the payments, which is 90 days. It's about 3 months. With the hope that in 3 months, things might have turned around for you. But if the 3 months pass and you are completely unable to make your payments, your policy might lapse. So that would mean you're no longer covered. However, let's assume 1 year down the line, you get a job, things are looking up, you can always come and reinstate. So remember, you've said you had done 6 years.
Yeah.
So you'll not start from scratch again.
Okay.
You'll start off where you had left off from year 6 and continue.
Oh, so you can reinstate it.
You can reinstate. But I usually tell my clients, always speak to your agent the moment you notice you have a challenge, because there are other things that we can do on a case-by-case basis that will help you maintain your cover. Because we could even reduce it. Because, maybe you can no longer pay 10,000 per month, but you can do 3,000. So case by case, we can see how to help you still have some semblance of protection.
So in other words, you're saying that these insurance companies are very flexible
Yes.
in how they deal with you as an
Yes.
individual.
Yes.
Okay.
I know there's some negative publicity out there.
Yeah.
And just like with any industry, kuna bad apples,
Yeah.
but we have more of the good apples, more of the good people, more of the good agents. So just reach out to them, tell them, oh, something is happening. How can you help me? And you'll always find, for majority of them, there is a way they will be able to work with you to still maintain your protection.
Okay.
Maybe change some of your terms, could be decreasing the premium.
So again, you can decrease it in
Yes.
in terms maybe
Yes.
when you're facing financial
Yeah.
challenges, you just need to always communicate to your agent.
Yes. So on
Okay.
a case by case basis.
Okay. Got it. So how long should premium payment be done?
So you choose how long to pay. So the 10, 15, or 20 years, or you choose to pay until you're 60 years or until you're 65.
Yeah.
It's dependent on
Okay. I was wrestling at some point when I was making a personal decision on whether or not to go back to school.
Yeah.
And the course I wanted to do was supposed to take 7 years.
Yeah.
So I went to a friend of mine and I was like, 7 years is too long.
Yeah.
You know what he told me that got me to go to school?
No.
He told me whether you go to school or not, 7 years are going to lapse.
That's true.
So they better lapse while you are in school
Yeah.
rather than just lapsing while you have not done anything.
Yeah. Because in hindsight
So-
you'd say, aki 7 years imepita.
Inakaa nyingi.
Ningekuwa nishamaliza kusoma
Yes,
sasa.
that is
Yeah.
true.
Yeah.
So the period should not be anything that bothers you.
Yeah.
It is just something that you continue paying, knowing that you are doing something good for
Yeah.
your dependents.
Yeah.
Yeah.
Because you see, you might find maybe someone is 57 years, and this is when the gospel of life insurance has reached them, and they want to take it up. So for that person, they might decide, I will pay until I'm 65 years.
Yeah.
Yeah.
And let me just ask one question.
Yeah.
What may cause an insurance company not to pay?
That's a very good question.
Yeah.
Very good. You know, people say insurance ni wakora, but they rarely look at themselves. Hata wao ni wakora.
Tunajijua.
You need to be very open and honest when taking up your policy. And especially about pre-existing medical conditions or the kind of lifestyle you lead. Do not lie. You know?
Do not lie.
Do not lie because you think, oh, if I say I'm a rally driver, they may not insure me. Or if I say I am this, they might increase my monthly premium. Instead of paying 5,000, they increase it to 7,000 or 10,000. Just say the truth. Because when you lie, that's when the insurance companies sometimes may refuse to pay up on the policies because of very critical information that was left out and which would have affected the policy from the get-go.
So let's say, for example, if you have a critical illness and you don't disclose that and you still continue paying the premiums, you are actually putting that particular cover at risk. Or,
Yeah. So let's say you're taking up a cover. So remember I've said we have like a free cover limit that you can take for up to 15 million. And you already have kidney issues, for example. Then as I'm signing you up, you fail to tell me that I have some kidney issues that I'm being treated for. And then 2 years, 3 years down the line, you come to make a claim for renal failure.
Oh, okay.
So then what
They
happens?
look and they see you.
Because you see, we have insurance investigators. So claims are investigated. So they come and they're like, hiki tu umekuwa na mbona ulikuwa unadanganya? You know?
And you'll end up blaming that company.
Yeah.
You'll end up blaming it.
And saying they took my money, but in reality, you did lie.
Didn't disclose.
I know you can argue and say, but si hata mnipatie kidogo. But terms and conditions
Terms and
apply.
conditions apply. And
Yeah.
you signed it.
Yeah.
And another question that has just come into my mind.
Mm-hmm.
Can an insurance company say to a client, we don't want your money, go away?
Yes, they can.
Under what circumstances can they
Yes,
say
they
that?
can. So underwriters have their own reasons. I will not go into them, but I will say that yes, an insurance company can
Can look at you and say, where?
can refuse to
Take your
go
money.
into business with you. Yes.
Okay.
Yeah.
So I'm just going to.
Same way you can be given certain terms.
Yeah.
And you say, no, because of this, I no longer want to work with you.
Yeah, it works both ways.
Yeah.
Hey, I've learned a lot.
I hope you have.
I have learned a lot.
Preach the gospel of life insurance to your audience. I like to think of myself as a life insurance champion. I want us to protect our loved ones.
Yeah.
I want us to, we talk about, I want to break the generational curse in my family. This is one way to break it.
Yeah.
Build wealth.
Yeah.
There are very many ways of building wealth, and life insurance is part of that.
And this one you actually have control over.
You have control over.
Yeah.
Yeah.
Let me just give you some summary points that I have gotten. Kama nimezipata vibaya pia unaniambia.
Sawa.
Number 1, wealth is built in stages. So we build wealth in stages. And
which stages are this?
The last stage is where
Which stages are this?
exams. The last stage is where you protect the wealth, and that is where you have come in with this conversation. And then insurance.
Let me just interject a little.
Yeah.
I know I said there are those 3 key stages of wealth, but they can run concurrently. That's why you're working and you have a medical cover. You're driving and you have your car insurance.
Yeah.
So even now you're alive, you're healthy, you're working, and you have your life insurance cover.
Yeah.
So they sort of work together.
Yeah.
Si ati kwanza ufanye hii, alafu hii. They can go in parallel. Yeah.
Okay. Start early. Start small.
Yeah.
Increase with time.
Yeah. That's very good. I like that. Start early. Start small. Increase with time.
Niko kwa hii conversation.
That's very nice. Start early. Start
we
small.
We should put that in a t-shirt.
Yes, I should print it. Yeah.
And the final one I've seen is it's not an expense. It's a financial shield.
Yes. Don't think of it as a savings. Don't think of it as an investment. And having a life insurance does not mean you're not investing or you cannot invest.
Yeah.
They can go hand in hand.
Yeah.
They can go hand in hand. Yeah.
Wow, this has been an amazing conversation. I've actually learned a lot. I have a lot to go and think about as I'm going wherever I'm going.
Yes.
And,
in fact, on the live, what do you call it?
TikTok live.
Yeah, that you do.
The art of seduction.
Art of seduction.
Yeah.
Maybe today at a relationship should go and talk about this. This should be the art of seducing, financial wellness, wealth protection in our lives. Maybe that should be the live today.
Yeah.
Yes.
And it's really something. One thing that I've really enjoyed about this conversation is unless somebody triggers your thinking about certain things, we tend to, I think that it's like there is some system in our brain where you can put the things that you don't want to think about and shut them. And then someone like you comes and opens them up, and then it causes you to just think about it and say, I think I need this.
Yeah.
And so I would like to encourage our audience.
Yes.
Do you want to find out when the risk takes place?
Prepare for it.
Prepare for it.
Before
Start small, increase with time.
And one more thing that people usually use to shy away from these conversations, they fear that if you sort of seem like you're preparing for death, death will come knocking.
No.
It will not.
Yeah.
I have done this for so many people, and none of my clients, I have not had to process a death claim for any of my clients.
Yeah.
So I am not walking around killing people.
Yeah.
Sign here,
Yeah.
life insurance. Gone. No. No.
Wow.
Yeah.
Wow. Oh, so that's amazing. And
Yeah.
thank you so much for taking your time to come here.
You're welcome.
I know our audience will be encouraged, will be taught,
Yeah.
and they will learn a lot about insurance. I personally have learned a lot about whole life, and I would encourage you to take it. I would encourage you to take it up.
Yeah.
I would encourage you to, we've said start early, start small, increase with time.
Yes.
Yes, that's what we encourage you to do. So if you've liked this conversation, we'd like to encourage you to share, like, subscribe, tell someone about it. Share this episode. Let as many people, especially that friend of yours whom you've been telling, and they've been telling you that I am not a risk factor, I don't need this, I'm going to lose my money. That is a person. Share the link to this video with them. Let them know how important these things are in our lives, and even how necessary they are to get us to that place where we know that our loved ones and our dependents are protected.
Yeah.
So thank you so much for tuning in. I know that we will have another conversation. I have
hope so.
a lot of questions. By the way, that has
Yes.
built a lot of questions about different kinds of insurance. And I think it would be very nice if we have you again and talk about something else. That question that you told me to...
I'll be happy to come back
Yes.
and talk more about this. I've enjoyed myself here.
Yeah.
It was also an interesting thing for me to be
Yeah.
on a podcast. I've never been on another one before.
first time.
Yes.
BTP.
So in fact, when we started the conversation was a bit, anxious. But I think once I started talking about life insurance, I got so excited. I even forgot about the anxiety
I can see
that
it.
I had.
And you see, that's how, in our podcast, we talk about human nature. Nini. That's how I know that you like what you're doing.
Oh, I like what I do.
Because the minute you started talking about the stages of wealth,
Yeah.
comfort was there. Now you're flowing.
Yeah.
You're even telling me that is not conversation for this day. This is for another day. So
Yes.
thank you so much, Abby, for joining us. With all this information that you're sharing, I know there are people who may want to get in touch with you.
Yeah.
And maybe see how they can find you. So maybe you can tell the audience where to find you and how to find you.
So they can find me on the socials. I am on Instagram and TikTok as The Financial Nest. So _financial_nest. So mnaweza nitafuta huko. Ama kama mnajua Silas, muone nyuma ya tent.
Behind the tent.
Yeah, but that's where you can find me.
Thank you. See you on the next episode. God bless.
Bye-bye.
Bye.